Okay, ladies and gentlemen, today was a bit of a confusing day. For many investors, they have no idea what is coming next. And here in this video, I will break down exactly what happened today and what is most likely coming next for our markets, as well as Tesla stock in the week ahead. The only thing that I ask you to do, it's free 99. It's hit that like button and subscribe to the channel. It helps push these videos out to as many people as possible. And trust me, I think everyone needs to hear this one. So first and foremost, there was some bad news today for Tesla stock, and I'll give that to you up front. Of course, we had Reuters with the headliner, the hit piece, whatever you want to call it, the FUD news story that 135,000 Teslas are being recalled due to an issue with the warning light for the seatbelt, which is an over-the-air update that has no effect on Tesla or your literal Tesla. But whenever you get those recall headlines, they tend to affect Tesla stock a lot. The more impactful news was proxy voting service ISS recommends that investors do not vote to reinstate Elon's comp package, and we all know what's going to happen if that vote fails on June 13th. That sets you up for a lot of downside. And this news today from ISS does raise the odds that maybe the vote does not go through. You have ISS, Glass Lewis, which are the two biggest proxy firms that said to vote no for that proposal. The third largest proxy voter company, I guess you should say, said to vote yes. So we'll see what happens. According to Morgan Stanley's Adam Jonas, he did a poll where he polled 109 institutional investors that own Tesla, and 57% of those respondents expect approval of Elon Musk's comp package, outnumbering the portion of respondents who expect a non-approval by about a 2-to-1 ratio. So in other words, there's a very strong chance that this actually does go through and turns into a big positive catalyst for Tesla. But what we've seen over the past couple of days is some investors are nervous here. They're going out, they're buying some puts to protect their portfolio. Now, there's a couple different ways to look at puts. If you are super bearish, you're going to go out the money and you're going to buy some puts. That would be like if someone's going out and buying 150 puts on Tesla, 140 puts on Tesla, or even 160 puts on Tesla. That means they're kind of bearish. But the trades that we have seen lately are like 250 puts, 260, 270 puts. And they're very expensive. It's basically a 1-to-1 ratio to hedge out your portfolio. You buy one put for every 100 shares that you own. If Tesla falls 10%, you make 10% on your options. Well, the equivalent value of what your position lost if you're hedged out for one option for every 100 shares. I know that sounds complicated, but long story short, hedge funds, institutions, they're not necessarily bearish. They just want to hedge their positions heading into June 13th. Now, when you go out and you buy a 260, 270 put, the break even's like 0.1, 0.2%. There's hardly any fall needed to break even. So what market makers have to do, they have to go out and short stock. And I think that to some degree may keep a lid on what Tesla does. Now, could Tesla rally into the 180s, 190s next week? Potentially, and we'll discuss why that is here in this video, but I'm not necessarily expecting anything too dramatic in either direction. I think you can get some pretty big swings. Wouldn't surprise me if Tesla went up to the high 180s, came back to where we are today before June 13th, because there's going to be a lot of speculators, there's going to be a lot of different hedging strategies involved, and overall, a lot of volatility. Now, what we actually seen in the markets today is what affected Tesla, big tech, AI stocks the most. Just as a quick summary, PCE data came in better than expected. It came in at 0.2% month over month for your core PCE. We were expecting 0.25%. So you came in on the low side of 0.2%. That is seen as great news for stocks today. On the other hand, you had Dell that fell over 18% upon earnings, really throwing cold water on the entire AI trade. Now, I say this all the time, especially during times of volatility in our markets, and I'm sure you've heard this before if you're a viewer of this channel, an everyday viewer. Thank you for watching every day. Hopefully you learn a lot more than just this. But I say this all the time. Markets can handle bad news. They cannot handle uncertainty. Okay, so we got bad news today with Dell earnings. There was lofty expectations. Dell did good, but not enough to justify the valuation in which they were trading at. So what happened? The stock sold off. It made everyone else question whether, Nvidia is going to continue to see a lot of demand, or SMCI or AMD, or if Microsoft or Meta, some of these other big tech names, deserve the AI valuations that they are currently being given. Now, the good news is this is Dell reporting earnings. 2% of Dell's revenue comes from AI. Dell is one of the last companies that reported this earnings season. We already have reports from these other companies. So for an example, if Dell reported before Nvidia and sold off 18%, that would create a lot more uncertainty about Nvidia, about other, AI stocks or AI adjacent stocks. We already know what the situation looks like at Nvidia. We already know what AMD's situation looks like, Microsoft, so on and so forth. So yes, this was not great that Dell's selling off today, but I don't think it's the end of the world for these other stocks in which you did see a little bit of a reset basically across the board. And I actually think Dell earnings is by far the biggest catalyst we had for the markets today in a negative way. Now, PCE was a huge positive, and you've seen that reflected in IWM that was up about 0.4% today. And really, this is the first time in a long time you've seen inflation come in lower than expected. And our expectations were this was already going to be the most disinflationary inflation report that we have seen in all of 2024 so far. So this was like a double whammy of good news. Just meeting expectations would have been good news. You came in even lower than those expectations, at least on your core month-over-month number. And that's why I do think, again, small caps are outperforming today, and I do think small caps will likely start outperforming, as well as interest rate sensitive stocks. Now, we did have some bad news come out today. Chicago PMIs came in around 34, and you were expecting a number around 40 to 41. So showing weaker economic activity. You also seen personal spending come in weaker than expected, and it was revised lower from the number last month as well. Overall, slightly weaker spending, weaker economic activity, lower inflation. That's a good recipe for stocks to do well here over the next couple of weeks. And even further validating my point, you actually ended up closing green on the NASDAQ as well as the Russell. The markets get over bad news quickly as long as there is no uncertainty. And that's why we did go into some call options today in the trading community. Check out that link down below in the description of this video if you guys, and only if you guys, want to be a part of the action over there. But I do think in this upcoming week, this likely leads to a pretty aggressive rally for stocks. Now, even on the small caps, you closed above your 20-day moving average. That is a fantastic sign. That is what you wanted to see happen into the end of the trading day today. And that's what happened. This likely leads into a much larger rally for small caps, interest rate sensitive stocks, and ultimately even Tesla. Now, as I mentioned in the last video, there was a lot of option activity today and even into the close of the trading day, specifically around June 21st. Again, here is a 240 put for June 21st. Here is a 250 put, a 255 put, 266, 276. Look at this trade. It was $20 million for a June 21st 276 put. I mean, that's a large position, right? That is 2,000 contracts that would appropriately hedge out a 200,000 share position in Tesla. Now, what does that mean? That also means market makers had to go out and almost instantaneously short 200,000 shares of Tesla. And that's just looking at one trade. This one's 11 million. That's 2.3 million. That's 4.5 million. That's 5 million. These are large trades. That's 17 million, 12 million, 4 million, 7 million, 2 million. I mean, these are huge. 3 million, a couple that are a couple million, 17 million there, 12 million. There's a lot of these trades, okay? Another 12 million, 5 million, 3 million. 11 million, right? And they're all deep in the money puts. This one's a 300 put for 4 million. This is a 320 put for 4.3 million. Again, that's not necessarily saying people are bearish. That's not exactly expecting a lot of downside, but that is appropriately hedging a position heading into June 13th. And I've said it before and I will say it again. If you are worried about your Tesla stock, if you would lose sleep at night if it fell 10 to 30% from here, if it fell to a new low for 2024, buying one of these puts to hedge out your position may not be a terrible idea. Sure, you lose on some upside if the vote goes through like we expect it will and Tesla stock rallies. Your option's going to cost you some money, but you're still protected for the downside if things go sideways. So it just depends what kind of time horizon you have, whether that may make sense or not. Good news is if you don't have a hedge on your Tesla trade and you did want to put a hedge on your Tesla trade, again, I don't blame you. I'm not, because I, will continue to buy Tesla, continue to hold Tesla no matter what happens here. And I ultimately don't think Elon's going to leave. But again, the uncertainty of whether or not Elon could leave if the vote does not go through would definitely cause a sell-off in Tesla stock. Full transparency, I'm not going to be buying any puts as protection heading into June 13th. May I do a strategy of going long and short Tesla and options? Of course. If you guys want to see that, check that out. Link down below in the description of this video. But that's more of just a trading perspective. Again, good news is in this upcoming week, it looks like momentum is to the upside in the markets right now as inflation, PCE, came in lower than expected today. That's very good news. And maybe that means Tesla stock can rise next week. And that means those insurance contracts, those puts potentially could become cheaper in the week ahead. More good news is Tesla stock hit a low today of about $173 and some change today. You ended up rallying back to about 177.97 here in after hours, above that 20-day moving average. That is a critical level of support that we want to hold above. As long as we hold above that, things look pretty good for Tesla, right? You're still above your 50-day moving average. You're above your 20-day moving average. Your short-term kind of momentum-driven, if you will, moving averages, you're above those. You got to get above your 100-day moving average for things to get a little bit more exciting. That's around $182.63 per share, but inevitably, I think that is going to happen. Next week on Monday, you will have ISM manufacturing PMIs. That will be important. JOLTS job openings on Tuesday, that will also be important. You have ISM services PMI. Yeah, that's going to be huge. The service sector, we're actually expecting that could get a little bit better from last month's contractionary number. So definitely have some catalysts for next week. That's for sure. We do have, well, that's pretty much it for Thursday. For Friday, you do have your non-farm payrolls report, expecting a number that could actually fall down to 151,000 jobs, and the unemployment rate, which is expected to stay the same at about 3.9%. So next week, you're going to have some big catalysts as well, and maybe even the beginning of the week, you could see a rally and then maybe a little bit of consolidation heading into really Friday's big data point, although Wednesday's ISM services number will also be very important. But nonetheless, let me know what you think about this information down below in the comment section. Are you bullish? Are you bearish? What do you make of today's reaction in markets? Let me know all of that down below in the comment section. Most importantly, enjoy your weekends, and I will see you in the next one.